Okay, hi there, guys. We all ready and raring to go? Just let me know if you can hear me loud and clear. G'day, Peter. How are you, mate? Okay, assuming I'm coming through okay. Anyway, welcome to Trade Setup live stream. It's the 15th of November, so a day closer to Christmas, which is a busy season. For anyone that's new, welcome along. On the top left-hand corner, you'll see our Twitter feed just on the screen there. If you like to follow us on Twitter, that'd be much appreciated. And anything we we do post, it's not quite it's probably daily, but it's not going to overwhelm you at all. But if you give us a like, that'd be much appreciated. The top right hand corner is Facebook. They're pretty much the same sort of thing. In the bottom right, if you subscribe to us at YouTube, so anytime we do go live on anything at all, you should get it straight. You'll get a notification from YouTube along with if you're linked into TradeSetup, the app. And what we got right in the middle is the general advice warning. So give yourself some time to read through that. If you have any questions, give us a yell. Alrighty. Let's minimize that then. And I'll just change my screens. So it looks like the market's slipping down again. It's been holding up not too bad for the good part of the day, but it just looks like it's edging slowly lower today during the session. Let's just see what the intraday charts are showing us. You can see that there's been a lot of news out actually. I don't know. Let me just check what data we had out today. I think it was an employment change or something. See what they're coming at. Thursday employment change. Okay, that's previous was 7.8. If anyone doesn't know, this is where you can get your data just from in here. It's called Forex Factory, and it's just the major releases, for each country, what's going to affect the markets. So today we've had Fetch Out Power speak, which was I don't know how that went. I haven't really been watching the currencies to see what sort of reaction, especially to the US dollar, has been. Employment change in Australia, so that's last was 7.8, up 7.8 thou. Expectations were 19.9 thousand. They come out 32, so quite strong, which may have seen the the Aussie dollar kick lower, actually kick higher. Sorry. We'll see how they go. Unemployment rate, last was 5. Expectations of 5.1, but it's hovered at 5%, so that's quite interesting. And probably in about 25 minutes is the RBA assistant gov. So I've got a feeling just sort of waiting the market, sort of hanging around, potentially selling off. That's what's higher employment rates, potentially looking at stronger data sort of leads towards rate rises. That's sort of what people will be gearing up for, you would expect. So maybe that's what's put pressure on the market. And if we just go back and see when it started to sell off, was somewhere around about the 11:30 mark. So it was hovering around yesterday's close above 57.35, and then just after the numbers started edging lower, and we're down now 21 points. So there's still that bearish sentiment around, which is unfortunate, but that's the way it is. We've all seen. I don't know if anyone's managed to take a look. What we're looking at, and we've probably spoken about this a while on the ASX. We're looking for that sort of 56.50 to 57 to be a bit of a line in the sand, and I feel if that can't hold up, we've got some few major issues. But yeah, basically you can see the weekly chart here. Let me just actually draw it up so we know what I've got my eye on here. All right. So we probably mentioned this on Monday. You've got this zone through here is sort of the key zone, which I'm expecting. I mean, if it's going to hold up, you'd want it to hold up there. You want it to at least get some sort of reaction high. The one thing that I don't like, the one thing I'm not keen about is the fact that it's just bouncing off that 57 mark. Sorry, it bounced off the 59.40 to 50 mark. Just 1 second. Yep, sorry, just had a phone call come through there. So yeah, just look at you can see that clear on the daily. So that's probably going to hold the pressure down. It's holding the trend down. You can see that 59.50 or thereabouts 45, holding the market down. and that's holding that trend down. And what I was sort of expecting more than anything, if we're going to see some positive moves, I just wanted to see that broken. So I'm a bit tentative to say, I wouldn't jump in here at all, especially the way the market is. We've come off 20 points pretty quickly. There's still that bearish sentiment around. The US is still, um, they're struggling a bit, obviously, but it's this weekly. I think if this can't hold up, I don't mind if we come ploughing into that zone because I would expect some sort of reaction. I'm just sort of keen to see if we can build or hold a higher low around 57. I'm looking at really. If we come back down and really flush out this level again, it's still looking a bit negative, and that's probably because that anchor to the trend down at 59.50 or so is still intact, still holding that trend down. So there's a lot of, I still think there's a lot of water to go on the bridge first before, even if it does hold up. I don't think it's going to be a race into the market. People are going to still be tentative. There's a lot of price action to play out first, and I think there's going to be more than enough opportunities. And what I'm seeing, a lot of it on the longer term trend, the longer term weekly trend, a lot of their shares they're looking okay on the longer term weeklies, but there's the dailies that have got crucified a bit. It's more of a pullback. A lot of them are looking in pullback mode on the weekly, so that's going to take a while to play out, which I'd suggest would go in hand with the ASX. Now, if it does play out, you've probably got more than enough time to see some good quality setups, prepare yourself, take your prime entries and see if you can lift from there. So this is actually a good note, the fact that we're oversold when we last down at this zone around 57. I can't remember what that low was. We pressed up to overbought. Now we come straight back down to oversold, and it looks like there's a lot of, it's a really, really not a solid level, but a pretty key level that can easily hold up. And it's a good zone to really see some buying action. The bulls start to support that price. Look, if it doesn't, so be it. We're not getting in until we see the price action we want. And really, it's a matter of just keeping your eye on what the longer term charts are. And we've still got the potential for that to chop around here and hold a major lower high. So you really want that price action to start playing out in your favor before you start diving in. Does that make sense? Just what we're having a bit of a chat about there, guys? Just let me know. Because for me, the ASX is key at the moment. If we can see that sort of buoy, we've got there's still quite a lot of headwinds over in the US. Well, global markets. You've got emerging market problems. You've got Italian bonds. It looks like the Italians are not happy to resubmit their their plans, growth plans, whatever, to the EU. They're still, they're going to have problems with debt unless they sort of formulate a different plan, now budget plans. But at the moment, the US dollar, if they're not really going to take care of their deficit, then that's going to escalate, especially if the US dollar starts rallying. We've got interest rates rises on the card in US dollar, their debt's in US dollars. So that's just going to really put the pressure on over in emerging markets, which is, that's going to put pressure on the euro and European markets. Say, what do you got? Germany, even Britain, all that sort of zone. Now, of course, doesn't necessarily mean there's going to be pressure on the US because it's more got to do with the US dollar, but they got their own issues. A lot of people are looking at it's overextended. How much more growth into the economy can there be without a decent correction? Now, have we seen that decent correction or not? That's sort of the key at the moment. And higher, don't forget, higher as US dollar heads higher, the cost of debt is higher. Now, if you've still got these trade issues going on with the US, so US and China, there's a lot of companies there that are probably suffering a bit because of the tariffs. Now, if they continue for too much longer, or they get, it starts kicking off a bit more, they can't work out the differences, then those companies are either going to be the same or a little bit worse, so that you can sort of count them out for growth. Then all of a sudden, you've got everyone else that's relying on a weaker or lower interest rates in the US, for debt, then they're going to start to put it under pressure. So if you're extended and all of a sudden your debt cost goes up, then you can obviously write off growth or corporate growth for not completely, obviously, but it's probably a lot of people have just seen it as it's been peaked. So for me, there's quite a few things adding up. Like there's still quite a few headwinds. But on the flip side, I don't think Australia's been doing too bad. It's a healthy correction off the highs around 64. It's just whether or not it's going to go deeper or we're going to start finding a base. And if we do find a base around here, I am expecting more price action. So I want the harder the correction down, the more confirmation you want that it's holding. I mean, that's sort of, I guess, a basic rule of thumb. Well, that makes sense there, guys. Anyway, so that's your daily. I mean, you can see the way it's plowed. Even the fact that it's plowed into that zone a couple of big days down, for me, that it's not. I know that creates a bit of fear. Of course, it creates a bit of fear when you've got money on the line. It's going to create that fear, but usually when they plow into a level like that, they can react quite hard. So that's why I'm not minding this sort of price action. It's just dropped down from what 59.50 where we were holding up there. People were buying it up in this, being squeezed back out in a couple of days. So you can see what's that? So that low here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 12 days. Pretty much unwound in about 2 or 3. So you can see that anyone that sort of maybe got caught on the way down here, leg back in, thought we're just buying off the lows. It's really just bargain hunters jumping in there. They turn around and get squeezed out. So the people who have got caught maybe once or twice are going to be very tentative to start jumping back in. Whether they're going to be tentative overall, they're not going to be shorting the market as such, but what it's doing is just really taking some fuel off the side, out of the market, back onto the sidelines. And when people are fearful, they tend to, turn off the computer for a while and just call it a day for a while and let it work its way out. So if there's less people willing to sell to buy, there's potentially less people to be squeezed out as well on moves down. And it's probably the more astute trader has probably got out when they saw this kind of price action, and is really just waiting to load the boat. It's probably got most of their funds in cash, and just really waiting. I think that's pretty much what we're doing. We've got 2 positions on at the moment. Um, not looking, one's up. You can see RFF. It's up, bit of a pullback today, which was expected. It's still great looking weekly chart. Like that chart starting to curve up. We've got our first high low here. Considering the conditions, it's not doing too bad. We're still slightly up on that, whereas BXB is finding some weakness, but look, we just have to see how that goes. I'm still got to stop just below, I think it's 10.20. So if that can't hold, okay, so be it. Doesn't matter for us. You take a little loss, you lick the wounds and move on. But either way, we've only got 2 shares out of potentially 10 that we're looking at. So I think it's more prudent just to take your prime ones if there's not too many prime. And I mean, if there was a lot of prime setups at the moment, would probably be a lot more than two entries, but there's just not a lot. We have seen quite a few. I'm just going to go see where a few are shorts. Now that's Origin. No, it's not. It's Argo. That's Origin, which is still continuing its way down. We're looking at that one here. I mean, pretty much missed the boat on that, but that's still looking weak. So that's not holding up. That could potentially come down to $5. There's no reason why it can't. It's sort of at that zone right now where if it can't hold up, it's going to be breaking down to 6 and then further. But we'll see how that one goes. The other one we did have on the short side was Westfarms. Copped the beating the last couple of days, but the difference between this, and that's why I was happy to get out, say around that 45.50 mark, pretty much just about where we are. I think it's 45.60 to 50, a bit below where we are at the moment, is because it broke the anchor. So this is the reasoning. I mean, we could just plow lower, who knows? But for me, what I was looking at this one, you can see that trend down, and you've got these little anchors holding the market down. That's all up within this trend. So this one trend down, it has down, up, down, higher lows, sorry, lower lows, lower highs, and so on as that works its way down. As soon as you break that, you've got it's either a change in direction or it's going to be a bit of a sideways action. Now we just broke that with this pop up. So we could just be coming back down. We could be retesting the lows. We could be falling short, building a high low. Who knows? But sooner or later, they might start to drag some buyers in here because of the longer term structure, which is all this, sideways for a while, first breakout, pull back to the breakout zone, which is pretty much the 45 zone. So for me, that was a short. I don't think it really is now. And if that's, if the ASX is going to hold up, that's probably something that's, plays into the same type of story, I guess. But shorts was, what was there? There's something else, ALX. Oh, it's gone. That's come off since we were sent out that alert. We're looking potentially for a short on that. It hasn't set up yet. Let me just see if I can. Let me just get rid of that. Just get the chart up that we just were looking at. So anyone that's not with the, not following the alerts. Yeah, I hope Westfarmers, I think I've pretty nailed the top. Well, hopefully nailed the bottom. Problem is that we don't know just yet. mean, there's every reason with Westfarmers. It's not about getting the height at the top and bottom. You kind of love to spruik it a bit when you do, but that's yet to be seen. But if we don't, it's just about the name of the game is taking a chunk out of the move, and that's all you ever want to do. Never try to pick the bottom or pick the top. Just try to take a chunk out consistently. And by doing that, I think you're going to put yourself in a prime position for your statistics. It's going to mean a lot better than 50-50. It's probably going to mean 60, 65, 70, probably not 70 as such, but 65% right, which is great. And if you can get 50-50, I think I was talking to Peter yesterday about this. If you can get 50-50 and 2-1, that's all you want. And I think from there, if you consistently, you work up your confidence. And then from there, it's just mitigating any risk, getting better at your trading style, and working that 50 up to 60, and potentially 2-1 to 3-1 or so on. And then you get the occasional cracker that goes 5, 6, 7-1. And that's where you're going to be really killing it, I think. But that's the name of the game, not to be right all the time, not let your ego stand in the way, but really just try to be consistently, and it's pretty easy. It's like tossing a coin. You know that over time you're going to be 50-50. You don't need too much of a trading style or a strategy to be 50-50. You just got to be consistently implementing that strategy, not deviating every time you get it wrong. So, that didn't work. Hang on a sec. It doesn't mean it didn't work. It didn't work this time. It doesn't mean it's not going to work next time. If you had some sort of strategy, you've got an edge. Implement it consistently. I wouldn't guarantee, but I think it's highly likely that you're going to be profitable. You're going to let the ones manage your risk if you're wrong, let it ride a bit if you're right, and you'll probably get 2-1. So that's basically trading and then working on it from there. More experience means that you can probably see that, potentially I'm buying in here. I'm going, hang on a sec, this doesn't look really good. Rather than buy off what I would normally buy off, you start to refine your entries a bit more and your exits, and that's what's going to lift you from 50 to 60%. There you go. How's that for a little sermon there, Preet? I get carried away if you've never noticed. What was I going to get up? Oh, I forget. ALX. Is it ALX? Where's that chart? I'm going to show you what I'm looking at on ALX. I mean, right or wrong, we'll see how it plays out. It's looking, just with that little push through 660, or this low. Let me just make that thicker. This low here, 657. I think it's really showing some signs of weakness for me. I've got to find it. Here we go. So that's the chart we just sent out. And it's really, you've got this washout of the high, previous high. So that's your line in the sand for your highs. And what it's done since there, it was a good little trend up, higher lows, higher highs. Everything was going nicely. Pull back here, that was your higher low potentially. It's a confirmed higher low too. As soon as you trade at 720, what it's done is turn around and just wash that level out, come banging straight back down and broke that 660, that higher low of this trend up. So as soon as it breaks that, you've got to be wary. Either one, if you're long, look for an exit, look for the door and reassess it. Never just hold it and try to hold through a correction. You don't know if it's a correction or complete capitulation. Now, if the market's bullish, you'd be banking on this being a correction. You can potentially hold it. Or you can take off a partial, close out some, and hold a core position. And then if you're right again, start to build your main position again. Build around your core position. But when the market's so tentative like they are now, you really got to be careful. I'd always be prudent because corrections can be deeper. And sometimes they're not corrections; they're complete. It just drops out of the sky, and you don't want to be in the market when that's happening. I'd much rather give up some profit and be right than hold on trying to be right and be wrong. If that makes sense. No, will do, Farad. No problem. Got your fruit. Now where are we, Peter? Good. So this one. So what you've got the markets pressed down. As soon as you break that, your key sort of support zone or anchor level to that, and this is the anchor level to that uptrend. All your higher lows are pretty much anchors. So as soon as it's broken, you've got to reassess it. And what you've also done is popped up and you've retested. It's not a major zone, but as soon as you retest it and wash it out off these lows, even a double bottom through here at 640, you've got to be questioning that sort of price action. So for me, we could be seeing, say, a move from 720 down to 640. What do we got? 80 cents there. If you take 80 cents from about 7, you've got 620. We could be easily moving down to 620. And if this market gets a run on the ASX to the lows, then this could go a lot deeper. most things will get over exaggerated on the upside or downside. So if this is going to get exaggerated on the downside, be very wary, especially if you've got ALX long. Be very wary of this one. I think you can see this little inside lower high at 680. You've got your key zone down at 640. I think if we pop down and we start to build and these MAs start to spread to the downside, then yeah, that one could be a good little short. And you can see there's probably going to be a lot of fuel. Oh, I've just got it there. Excuse me. There's going to be a lot of fuel. Look how long and strong that trend has been up. It's been pretty much, you've had a good kick up, good correction. The kick up has been since the end of 2016 from lows of around $4 to nearly double. So at 75%, $7 thereabouts. So that's been a good strong rally without a major correction. You've had these little daily corrections lower, but this leg up. So you got a leg up, pullback, leg up, pullback, leg up, pullback. Really retested those lows. It just keeps going up. So even if you did get short and on the weekly it was just a corrective price action, you're looking down to 6. Okay, you still got a trade on your hands. You still got some sort of hedge to your portfolio if you're long, if you've got still quite a few longs. Yeah, that's pretty much it on that one. Now let's just run through what the overall markets are doing. We're still, what are we now? Edging lower. Good old ASX. We're really not the force to be reckoned with, are we? 57. We're right there now. So let's just see what happens. Well, we're not going to sit here and watch it just now, but we'll see what happens in the coming days. Whether this just kicks on with it, we're down another 50 points today. If it breaks down to 56.50, what do we do by the end of the day, and see if we can get the US rallying tonight. I'll see what happens there. That's a Dow. On a weekly, doesn't mean to me that doesn't look too bad. It's just whether or not this is going to be a lower high. So you can do two things. Don't forget, if this is our market, so we've got obviously big trend up, bit of a pullback. You've got a leg up there. It's just gone through the highs. There's one or two things can happen, which is quite clear. You either get this sort of price action where it's popped down. That could be construed as a lower high, and it could just break down. You've either got that sort of price action goes banging straight through, and then you've got this major, everyone running for the doors type of price action, and then you're really going to be wary of what you're holding and what you've got, and putting any more risk into the market. Otherwise, you can just hold up. If I go back to this color, I just want to draw that support line. So that's our support line there. Or we just start to chop around and start to squeeze with buyers and sellers squeezing in. Then you get that point of agreement, and that could take a good part of the next couple of months into the new year. Well, at least into the new year or further. Don't forget this sort of pullback, what we've had here until we reach back up there, was pretty much a good part of 6, 7, 8 months before we reached back up and the US got into new highs. So all this time price action took a few months. When things come down, you're going to probably know it pretty quickly. But if it starts to correct and you've got these inside high lows, inside I mean above that trend line, like this, then yeah, just be wary that we're not going to pop back up again and start to rush up through those highs at 27. So if you're getting very bearish, be careful. But at the same token, if you're very bullish, just be careful. We just don't know what is going to happen yet. Of course, never try to guess. Always try to just see what the price action plan ahead, just like we're doing now. We got the plan. If this capitulates here, okay, we're either getting out of our longs or we're going to start getting into some shorts. Or if it starts chopping around here, just be careful of loading up on shorts and really, look to the long side. Anything that's setting up prime, it's worth taking a dip at. But you've got to plan ahead of what you want to see and what's going to trigger you buying or selling. All right, so we got here the DAX. That's the S&P. It's going to be a very similar type of thing. Through the highs, had a big pullback, and that's a big clean out of these late buy. And anyone that's bought it up for 6 months or so got done in about a couple of weeks. So what is it? Up by the escalator, down by the elevator. I've always liked that saying. So that's the S&P. FTSE, yeah, that's looking a bit weak a bit. They've still got their Brexit issues. I don't know if anyone's been following that. There was talk that they was going to sign a deal. I don't know how May's going, but I don't know what the latest is. Yeah, the deal's on there, but there's always that kerfuffle with it, Scotland and what is it, the Irish borders or something, that it's going to get voted down. Any sort of Brexit deal is going to get voted down until they work that out. But that's it's going to cap. I think Europe is going to cap the FTSE, it's going to cap the DAX, and don't forget, throw in the mix of emerging markets, then yeah, you've got a few issues to contend with. But sometimes when you've got those sorts of issues and the market's down on its knees, it can actually be a good thing just buying, because you've got everyone that's scared, everyone that's bearish, and they're selling into the market, and people are just soaking it up, and they've got more than enough volume to start ticking off. And by the time people who are selling have realised they got it wrong, they start chasing it higher. It's just triggering that trend off. So it's a difference between the market being on its highs with all the headwinds and being on its lows, because are we factoring that in? Have we factored in enough? All these sorts of questions going through your head, and you're just really waiting for that price action to play out. We've got DAX. That's a DAX sort of pretty clearly heading south at the moment. But the longer term trend, that's the monthly, that's up, well and truly up. This is just correction, a corrective price action. So for me, I haven't looked at this monthly, to be honest. That trend, that's that trend there. It's still holding, and it's really just coming into that zone now. It could be an ideal buy zone, sort of through here. Who knows? Who knows? But that on the monthly, it's not looking so bad as if you start looking at you get locked in on the weekly chart or even the daily chart. That daily chart's down. The weekly's maybe that's maybe a second leg down. Actually, I'm starting to like this. Let's just go that. That is your one, potentially two legs down. And you can see that the steepness of that move down compared to that. That there means there's more buyers just soaking up on the way down than just complete capitulation. Everyone running for the doors there. You got to bounce, and then that's seeing further buy. Does that make sense? So anyway, there's a few things potentially lining up on the DAX anyway. Let me just decline that. Does that make sense there, guys? Just what I'm banging on about. Anyway, that's your indices. That's probably the lay of the land, I'd say, at the moment. Let's look at Hang Seng. And even the Hang Seng, that's okay. It's washed out a few people. It's cleaned out a few people. But that's still your weekly chart. It's had a good run up there, and that's come crashing down hard, and then it's consolidated, holding these high lows. This could just be pure and simply a higher low on the Hang Seng on your monthly, longer term, which means on a monthly, it's going to take some time to play out. I'm not saying we're at the lows. I'm just saying, just be wary of what your overall time frames, and don't just get locked in on the daily saying, oh, okay, we're crapping ourselves, just let's run for the hills. Be wary of what's happening on each zone, because there might be a whole flood of buyers just ready and waiting. And while this market's coming down, your retail investors or your mums and dads are getting squeezed out. Not saying the bigger boys or the more astute traders might be sitting there just waiting and start to pick them off as we start pulling into lows. And then sooner or later, once they realize what's going on, like I said, could be too late. They could be chasing it higher again. But just be wary of what's happening on each chart, and sort of all time frames in a way. Try to build your picture. All right, chuck in some. It's enough of me ranting. I was putting some shares. We'll take a look at them. KDR, we'll kick off with that. Put in some more that you want to have a bit of a look at. Just going to go over to, now I do like this one, and it's just the last couple of days, but even for me, this is not so much, I mean, even with this, couple of down, you can see that it looks like it could be rolling over. This could fall off a cliff easy enough. And that's because you've had this good run up. But the fact, the more time it puts in here, and you can see these big candles, this is Clover Corporation. It's got, for anyone that trades blue chips, you'd probably be steering clear of it, but it's just potentially got, it's been rejected the first time, popped up, let's go back to the daily, rejected here, popped up, lower high, yeah, rejected about the same levels, lower high again. So that pressure's still down. They've still got some selling coming in, but each time around the 130, it reaches 130, 35, thereabouts, it's getting rejected and it's popping back up. So that selling is getting soaked up around that level. And this is what you just don't go, okay, look at it. We've got a support line here. We've got a support zone through 130. I'll buy at 130, put my bid in there and leave it, have my stop maybe 20 cents lower at 110 or even 15 cents lower at 115 or around 120 and buy off the bid, because it could easily go through both, stop you out and come straight back up. And at the same token, it may not even reach it. You might be right. It holds up at 140 and starts to rally. You've got a higher low, and then you're sitting there waiting for you to get hit on the bid. You rather watch the price action. You either keep away from it if you're wrong, or buy on the rise when you're right. That way, you're not guaranteed, but you're definitely going to cut back on your losses, and you're going to make sure you're on the ones that are winning, even if you have to give up a bit. Let's get into it. KDR. Yeah, Kidman Resources. This little pop up is looking good, and this is the way I would assess this. Starting off just from the daily, before we go back to the weekly, might as well look at the daily. There's a few little things I do like on this. I like blue. There you go. So the market's obviously that's I never take that as a high, because you can see when it pops up here, it pulls back, it goes through the high by a smidge, pulls back, comes back to retest that same zone at 240 with a lower high here, but it's really just that's my line in the sand there. That's pretty much going to be your resistance zone. So what's happened? You can see that you got lower highs working. It's probably a bit harder to see here. Lower highs, lower high, lower high, lower high. It's come back down, blew out that zone through 90. You can see that. That's pretty much reverse of this. And then it's popped up, and we've taken out that 125 zone with this move up. So that, for me, is this leg down is finished. We've just got to assess what's going to happen. No need to buy just yet, because it doesn't mean it's going to pop up here. Hold a lower high, you just pop up to 150, and then bang, come creaming back down, retested 90 or through 90. So really that daily, whether this leg down, draw that in a different color, this leg down is finished, and we're starting the new sort of leg back up again towards 240, or we're going to chop around a bit. It's a little bit too early to assess that. I'll be looking for this one, at least that's your one leg up, maybe pull back, and then your secondary leg up. I mean, let's just go back. Let's draw this in the pink. So that's your one leg up, which is here. You've had your secondary, whether we break that down to lower high, lower low, and then that's going to be your secondary leg up. So we're looking to take advantage of that secondary leg up. Well, we don't know where it's going to start just yet, but that's your daily. So what I always do from here, if I don't mind that type of chart, especially in the market conditions the way we are, is be flicking it back to the weekly. Now, from the weekly, it's a bit more of a severe picture, but not too bad. I mean, it's quite, let's just make that a bit bigger. It's quite clear it's had, there we go, push up here, a bit of a corrective phase through end of 2017, mid of 2017, and then it's rallied up. You've got it all the way up to this zone at 240, like we said. As soon as we break down that anchor, bang, you got carted out pretty much there. But you're starting to show signs now that this could be a high low on the weekly, and potentially that's what you're looking at right there. It's come all the way back down, so that's a massive reversion to the mean. So with this kind of sell-off, off these kind of highs, you just want to sit and wait a bit more. You don't just think it's going to, you're going to buy it here, it's going to come crashing back down and go straight back up again. I would expect this type of price action to lead to just taking this 1, 2, 3 up, 1, 2, 3 up. Oh, it's a bit off kilter, isn't it? So that's the kind of price action we're looking at the moment. I still would be looking at that as my support, potentially testing down to support, but at least contracting in, seeing this kind of thing. And then I want to see these higher lows hold, and then it start to lift. And if you can get that, what we've got is a major higher low with a couple of minor higher lows. It just means there's more time, more work's gone into the move, more work's gone into forming that base, which means potentially a stronger move up, which could at least take you up to 240 and straight through. So that's what I'm looking for the weekly, but I'm sort of in agreement that, yeah, we found the base down here, or we've found the lows. Excuse me. But it's just the daily that hasn't quite played out. Does that make sense? Sorry, excuse me again. Hope that makes sense there, Farrow. But that's the way I'm assessing it. I think it's probably in a good position, both on the weekly and the daily. It's just got to show the daily action's got to start to play out and show that it's going to, we're not the only ones that are willing to jump in and buy it, but there's going to be the weight of numbers behind us. And also look at this volume. As it's sort of pulling back, that volume's decreasing a bit, which is not a bad thing. A little rally is supported with volume, and the pullback is not supported with volume, which for me is a positive. Great work, mate. No mucking around. Give me 10. Make me work for it. There we go. It's not too bad. Probably wasn't so good right up until today. Jet Energy. It's done 500,000. And look at the volumes coming on these little spikes too. Pretty much was doing nothing. You had a little bit of volume come in here way back in July this year. And as it's creeping down, lack of volume, volume picks up back October, start of October to mid-October, end of October. Good spike in volume compared to what we've had before. So that little run up, that volume's been flushed out with this big move down. So sort of buyers that bought it up in here being flushed back out. But now we're starting to find a base, potentially find a base. I'll draw that up. We're potentially finding a base through here, whether it's 5, it's probably a bit wider than that. Let's just take this second one. You can see, well, come on, you can see what I'm talking about. Around that 4 cent level, you've got that 10. It's touched on there once, backed off from it. Volume support to move up. A little inside higher low here. It's pressed it back up through that zone, and we've got a green candle today. So potentially, if we can get just a few bit of contraction, by contraction I mean it's just popped up to 10. It's just come back down. This is this move down here. If we just get the same sort of thing, a bit of chop around here, and then this one I think it'd be ready to move straight up and through 10. And once it gets through 10, I think that'll kick on. Especially this, it's going to be coming off if everything holds true from here. It's going to be coming off that higher low around 6 cents. And then, God almighty, if that goes on, you'd be absolutely laughing. It'd be a great one. So that is JAT. What is next? ECT. That didn't work. What did I just do there? I typed ECT somewhere. There we go. Oh, might have typed it in the chat. Just looking for the right time to get in here. No, cracker. Look, it's shown that one there, that JAT is showing some good signs for me. Probably the same for you as well. Did I just... So I just got to change the screen. I must have changed the screen. Anyway. Oh, clear as mud. Now, is that your best fit, is it? This is a bit of a different story because we're not really coming off. I don't like it so much that, and you can see, it's not, if this one's going to hold up, you want to see a high low. I mean, I'm always keen to see a high low because high lows basically add up to buying pressure. If it's not going to get back down to the lows, it means someone wants to buy it, weighted numbers want to buy it. At a higher level, they're not waiting to get to the support, they're going to jump in now, or at a higher level. So when you see that, it's just confirmation that, look, it's starting to gather some steam. It's going to potentially gather some strength. So that's what I'm potentially always looking for. Well, not potentially, but I am. So you got that pullback. The market's kicked off here. It's come all the way back down, so it's taken out that anchor level. Of course, followed in that, you've got this lower high, pretty much here. That zone there, that buying strength should have come in, but instead, because we've broken way back here, the anchor to this trend up, these people, anyone that's got in here and hasn't got out with this big move down, is potentially seeing this as another opportunity that either takes a smaller gain or a smaller loss or a break even. If anyone's bought it up here and just held it, watch that, is going to get iffy too. They're probably trying to get back to neutral, but as it's come back down, you've got people who bought it up here and didn't get out, are not going to wait because they feel they could get smashed. Anyone that's bought it through here has watched this gain evaporate, pretty much gone from, say you bought it at 0.4. It's a hell of a big gain if it gets up to 3 and then you're back down to 1 again. You're seeing it get back down to 1. That's a big haircut on your profit. So what you're seeing here is this, bit of a washout here, and then it starts to sell. As soon as we start getting a couple of red candles, even this minor lower high in here, you're looking at the bigger context. That's your first leg down. You're looking for your second leg down, and you can see that that's played out quite nicely. So all I'm seeing here at the moment is something that's still in the early stages. If we can draw that through here, you've got, it could just chop around between highs and lows. I'm not too keen, and especially the fact that it's come down here, it's gone all the way back up to test the highs at 2.2. It's pretty much come all the way back down again to 0.9, 0.8, that support zone. So that's, if this is a strong chart, this shouldn't happen. This last leg down from 2.2 really shouldn't happen. If this has still got, somebody that knows something we don't, all that sort of stuff, or it's got some buyers on the sidelines ready to go in, they shouldn't be letting it get down to that sort of 1.9. They should be excited. The fear of missing out is going to make them buy it at higher levels, potentially buy it here. So if they are, for instance, it purely and simply means that there's more selling to go. There's still some sellers that want to get out. Does that make sense? That's just trying to interpret the difference in price action and what we're seeing, and trying to interpret with regards to strength in buying and selling. But yeah, that could be just chopping around here. So up until we get, say we lift from here, if we lift from here and maybe touch on 2.2 again, what I'd like to see is this kind of thing. And then, rather than come all the way back down to 0.9, I want to see that around 1.678, and then start to hold that high low, and then see if we can get this price action a little inside high low, and away you go. I think that's going to be a hell of a lot stronger price action than something that's pulling all the way back down to support again. There's that. Do you agree with me, Magga? If you don't, I'm turning you off. All right, so that's that one. What was that one? ECT hasn't even traded. What's going on? Suspension. India project receives approval. When's it coming back on? We're official quotation trading halt. 13th. What? Trade on Tuesday to the 13th of November. Oh, so when was that? That's 2 days ago, wasn't it? So when was that sent out? That was on the 9th. How come they haven't suspension? Oh, they're waiting for a better time, maybe. Pending the release of an announcement, they probably, no one wants to have good news thrown into a crappy market, do they? It's going to really mute the reaction of the market overall. So maybe the company expects to make on Thursday. All right, so that's it. I wonder when it's actually come back on again. Board meetings approving the signing of the RCA research collaboration agreement. All right, let's just we'll keep an eye on that and see what happens. Anyway, that'll be interesting. So we don't have to worry about that too much just yet. All right, what was next? That was ECCPV. Nothing there at the moment. All right. So we've got what's this Clearview CPV? Again, it's a bit of a smallie. Traded once today, 10 grand at the moment, 33 to 33 and a half. All right, this one, technically, this is your key. Your key is sort of down at 25, but also technically, I don't like the way it's come off quite hard. These sorts of things that could just grind lower. People might be buying this for whatever reason. It's a relatively new stock too, so there could be quite a few. I don't know what it floated at, what it came on the ASX at, but it's obviously listed around the 25th. Yes, there could be some people still holding that. It could be floated at 20 cents. They've seen this, they've sat through this, and it's come all the way back down, and they're looking at it from 80 cents back down to about 30 cents. still in profits, but they've given up a hell of a lot. So if that's the case, there could be just this bit of a grind lower until they start doing something else. I don't know what any of the news, but until they start building that picture again. The furor, I think, of the initial float and that initial run up is gone. So now it's like a lot of these companies that come on from the IPO, they talk it up, they good presentations, all that sort of stuff. People ram it up. People who don't get on the IPO because of the good news, what they're going to do. It has an initial run, and everyone's going to take their profits and run generally. And then after that, they have to start proving themselves. Once all that's sort of done and dusted with, you either get people are going to hold it for the long term, or anyone that was looking for that quick gain and either took it or they're sitting on a loss and they want to get out because they don't want to sit around waiting. And a lot of miners do that. They can sit there for years until they start digging some holes and coming out with some results and proving themselves. And then that story starts building again. And that's where you get these good runs and it starts to hold highs and really kick on. I think this is sort of that secondary phase where it's had that little run up to 80, and now it's going to have to start doing something, start releasing some good news, building that overall picture. So for me at the moment, just because of what's happened, 1, 2, maybe it's going to start holding up above 30 cents, but it's got to prove itself. It's got to prove itself by getting up and through 39. Start to push up, but instead these MAs looks like it's slowly grinding lower. Stochastics keep going to 50, back down, back to 50, back down. It doesn't matter. This thing could just keep grinding lower. So it's one just to keep on the radar if you like it. And BIT. Now, I think I know somebody that likes BIT. I know I've mentioned it a while ago. So I keep forgetting what they do. But anyway, oh no, I don't. It's not what I'm. It's not the stock I'm thinking about. So just forget about it. I don't know what they do. I think it's an IT company, isn't it? Tech. Is it tech? Let's just take a look. Yeah, no, that's right. That's right, Magnum. There's never been a hurry when the market's heading south. Biotech company engaged in the research, development, and commercialization of drugs targeting viral diseases with unmet medical need. All right. So I don't know what they've been doing lately. Or this was a big one. I remember I follow a few guys on Twitter. And they were intraday trading. It's a great one, the intraday trade. I think I had a nibble at it. Did okay, but nothing spectacular. Especially when it ran straight up here. And I think I was looking on this side for a buy. It just never played out for me. And this move here, you can see on the daily, just turn around, bang, straight up. So that would have caught, I think, a few buys. But whether or not that's at thrust up and then we get a lower high and it comes all the way back down. I don't think from here, after this type of move, I'd be patient and be more than happy to miss it if it doesn't play out. You obviously got, and that's your leg up. All right, that's coming under pressure. It's been moving all the way back down. I mean, technically it's still holding, that 8 cent mark above it. And then you've had this thrust up. So that green candle's good, except you want to see it chop around here. So we've got this big move down, green candle, and then we've started to get, I want to see this again. I want to see, some people start to edge in, and then you can sort of, take a break when it's rising through the highs. And then what you've got is overall, change colors. You've got 1, 2, 3. And whether that second move, if you can get involved off some minor higher lows and that secondary move up, could take you right back up to 40. And then you've got 2, 3 to 1. Yeah, if you get it around 20, it's 2 to 1, isn't it? But you know what I mean? So you want to see it hold up above 10 cents, but maybe get a bit of contraction there, contraction in price, and then up she goes. That sort of flag, whatever you want to call it, pennant flag, flying cat. Doesn't matter what you call it, but that's, theory behind this is that it's come screaming down. You've got the big green candles, you've got that expansion back up again, and then you want to see that contraction a bit, but you want to see again, so buyers have stepped in. They obviously ticked off here, stepped in here. It's come all the way back down. It's been a lot of profit taken. The patient ones potentially who are building a big position that may not know something, are building a bigger position, have been patient, wait for it to get back down, and they're starting to step in here. And then we want to see them start to step in at higher levels again. So you've got a high here, and potentially another one. And that's just longer term showing some support for that stock. And then you're going to get people that, and we're always, as shorter term traders. I'm not a longer term. You know, I'm not going to hold something for 6 months to a year unless I have to, unless it just keeps going up. The shorter term trader is going to be looking for that, you know, that quick spike. You're going to take those individual chunks of the leg up. I don't really want to sit through a major pullback. If this gets up here, then it has a major pullback and then chops around for 6 months to a year. I want to start, take it up here. If we stall up here, I'm out. Or if we start pulling back and I get a lower high, I'm out. And then just see what happens. Don't care if it keeps going. It's happened to me before. It's happening. It's going to happen again. But I'm more than happy to book those gains and just be consistent in the way I approach the market and just take chunks out of the market. All right. So that's it from. Has anyone got anything else that they want to have a quick look at? Market down 29. Are we holding up at that 30, 70? What's the low so far? It's 56.93. So see if we can hold that range there. I mean, it's not looking that great from here, but I think if it's going to, it's going to take some time to play out. That's probably all I've got to look at just at the moment. Nothing else is too flash. I think if there's anything else, that's probably about it. All right, if there's anything else, guys, you want to have a look at, just let me know. Otherwise, what we might do is call it a day nice and early. Actually, just before I go, let's have a quick look at crude. I think there'll be a lot of people, and I did watch something last night about the potential to be people sitting there waiting to buy crude because of the way it's come off the highs. I am waiting for more price action, but the way they analysed it, okay, made a bit of sense that it's extended, but how do you attack it? Oh, I've got crude. All right, let's just forget about that. So we'll look at the daily. We'll actually start from the weekly and work our way back. So at one stage, that was that zone we're looking at originally around 58, 59 to hold up. It had a reason. It had a little, higher low. As rising support through here. It had every reason that it should hold up there, but it didn't. The good thing about crude, obviously, that it's a manipulated market. As soon as they don't like it, it comes down too low, they switch the tickers off, the miners, what do you call them? The jets off. Decrease supply, and hopefully demand stays the same, and they increase price. So it's probably one of those things that can be done manually. Unlike any other market, you have to hope that people get sick of selling or get sick of buying and get a pullback or a rally. That sort of thing. Whereas crude comes too low, they turn it off. Gets too high, they can turn it back on, increase supply. Just sort of to control price a bit. So the fact that it's come back down here, now there's talk on crude of obviously OPEC and OPEC partners, other major producers, oil producing countries, to just flick the switch off for a while and reduce by 1.5 billion barrels a day, I think. So really just cut supply. Trump's not going to be happy with that. He wants lower prices, probably just because it helps the economy. It's another reducing costs in a way. So, but OPEC, they don't want to see something that's they're producing so much amount, for when they can get $70 a barrel as opposed to $50 a barrel. They want to see it higher prices, quite obviously. So if that plays out that way, are we going to see? We're on the weekly chart. That the way that's kicked off from 76 straight down over the last 1, 2, 3, 4, 5, 6 weeks, and we're nearly at the end of the 6 week. It's down into that overextended mark down here. There's quite a few things that is a stretch market. Even if we're wrong on that support zone, it's sort of back down here to a potential buy zone. I mean, I don't put a lot of stock in that. I don't buy it off those rising support. I still buy it off a higher low. I mean, if it come down here and stopped and then it started to push up, I'd look for that little pullback to hold a higher low and then potentially look to get into it. Wouldn't just buy straight off that zone. And that's what could have happened if you bought off that zone. We know that the people would be sitting there, longer term buys, and got squeezed out of the market with that push down to 55. So this could easily hold up here, and we could see if it could start to work off that zone, potentially looking at some oil companies or STO, WPL, whatever, BPT. Look at some of those to see if we can get a kick on if prices start to kick up. That's your weekly. Back to your daily. You know, nothing's playing out there. That's, again, weekly stretch to the downside, daily stretch to the downside. Could still take, from the weekly, you'd expect a few more candles at least, a couple more weeks of chop around that zone before the sellers start to call it a day. And, you know, if you're selling it here, there's no reason to get out just yet. You don't know what's going to happen. You'd rather hold your position and be proven. You know, you've got, especially if you sold off those highs, you've got lots of profit to sit on. You know, lots of fat in that trade at the moment. And you'd be willing to give up a bit, you know, especially the pro traders would be happy to give up a bit. Just 1 second here, guys. I'll just put you on hold for a tick. Just going to grab this and sorry, guys, back again. So we're with crude. So really off the weekly chart, it's extends to the downside. So it could be, it may or may not be the zone to buy off. Nothing's proven just yet. Only the fact that, you know, it is extended down. It has had a hell of a run down. Anyone that's been selling it up here has been sitting pretty for a while. They're going to let it go for a while. So the more it chops around this level, maybe pops up and comes back down to retest it, that's going to slowly change the seller's mind. They're going to go, look, don't look like it's going to get through. Let's just close it out, take our gains, and then just watch it through here. If it starts to go through, we can always reset, and we still got that, you know, massive profit that we're sitting on anyway. So all these sorts of things, you want to see a bit of time. Just the fact that it's plowed into that zone, there's no reason to start buying it up off that zone. You want to see. I'm just trying to think of an example. Something like this, you know, it comes down, pops up, comes back down, builds your high low. Then that's a sign that, okay, that selling's done, and there could be some buying coming to this market. Some bargain hunters, for whatever reason, yeah, they cut supply, reduce supply, demand picks up a bit, and people get bullish on oil again. Does that make sense? So the daily is not showing us anything. Flick it down to, let's say, the hourly. That's still not showing us anything. This could potentially be a lower high, or it could just come. It could still come screaming down, but it doesn't mean, you know, this trend is down on the hourly, definitely down on the hourly, and still down on that 30-minute chart. Yeah, down on the 30-minute chart. And this could easily be, you know, a bit of a squeeze. You're going to get those bargain hunters. So it's sort of chopping up here and then boom, straight back down again. Does that make sense? So it's worth, you know, if you are getting bullish on it, just give it some time. I think it's still got quite a bit of time to play out on crude. Nothing, there's no charts that are saying buy. It's just in a zone where if it starts to show some strength and it starts to show weakness in selling pressure, then yeah, there could be some good trades in it because there's going to be opportunity eventually. All right, I'll probably call it a day there, guys. Thank you very much for joining me. Any questions? If there's anything that's not making sense, just feel free to send through an email to tradesetup.com.au, and then yeah, I'll get back to you. If you do like it, it'd be much appreciated if you can leave a like on the video, or even just spread the word a bit. That'd be much appreciated. All right, I'll finish up there. Just saw the stream's still going. Anyway, I'll finish up there, guys. Thank you very much for joining me. Have a great weekend, and I'll speak to you on Monday again, same time, 12:30. Cheers.